Well, good afternoon, folks. On Tuesday, the 1st of August, as we head into US trade for the afternoon. We've rattled through a bunch of things this morning. Obviously, the RBA we alluded to, and the Japanese yen. Now, the bit of the data that we looked at from the Eurozone this morning has all come out negative, and the majority of it has come out negative. As you can see here, stocks, oil slide as gloomy data tempers optimism on the economy. Stocks and oil slipped on Tuesday as declining factory activity in the Eurozone and China tempered investors' optimism, which we'll have a look at. Quite substantial moves over the course of today, which actually is continuing now as we head into the US session, as we look ahead to the manufacturing PMI from the States. Have a look across to the grid. We can see stock indexes lower across the board. We can see US equity futures lower across the board. European equity futures lower across the board. Asia Pacific equity futures again lower across the board. Oil lower across the board, and that is clear risk off trading, clear money being taken out of stock markets. At the moment, you can see them all moving in line with each other. Commodities across the board lower as well. You can see your Aussie, your Kiwi lower across the board, which is clear risk off trading. You can see the US dollar, then obviously the safe haven of choice, with the Bank of Japan last week getting in the way a bit. You can see the US dollar strong across the board. Now, the interesting thing here, I think, is yields higher, right? These moves, I think, this morning were due to the fact that we saw that negative European data come in. If we have a flick across to the calendar and have a quick look here, we can see Chinese manufacturing PMI this morning, weekly. The Chinese, different calculation of it, or a different survey taken yesterday, which was again week below 50. You can see European, you can see Spain, Italy, Germany, all these manufacturing PMIs all below 50 and all negative, right? You can see the manufacturing PMI from the Eurozone in line with consensus, but still 42.7 is a long way below 50. So again, slowing factory activity going forward over the next month in the Eurozone, no matter what country you decide to look at. So clear negativity across markets driven by this morning. You also do get the unemployment figures from the Eurozone. You can see consensus was for it to tick up higher to 6.5%. Actual came in at 6.4%, which means then the central bank do still have something to think about in terms of interest rate hikes, as the labour market continues to be strong and continues to put upwards pressure on inflation. So it's all a bit doom and gloom surrounding the global economy this morning. As I said, all these European data releases plus the Chinese of the last couple of days is certainly not positive for global growth. Even throw into the mix Australian manufacturing PMIs and Japanese manufacturing PMIs all below 50. Brings us on then to this afternoon, which we'll talk about now in a minute. But if we just have a look at the moves, you can see the DAX and the Euro stocks getting hammered this morning. That then dragged the S&P, the Dow Jones and the Nasdaq lower, as well as the Russell. FTSE had a bit of a spike higher at the open, but post-open it then continued lower along with the rest of the stock indexes. So stock index downside across the board, whatever way you try and look at it. Now you see your Aussie Kiwi pushing lower, Euro Sterling pushing lower. You can see dollar Swiss, dollar CAD, dollar yen all pushing higher. Obviously then the US dollar index follows with that. But I think the interesting thing, just certainly over the last hour or two, is these yields in the US. Now, moves lower in the equity markets, I think, were driven off the back of the manufacturing data out of Europe, out of China, just being generally negative, right? So then them stocks push lower than off the back of that. But you've got this kind of re-acceleration to the downside from the S&P, the Dow Jones, the Nasdaq and the Russell, right? That has coincided with these yields pushing higher pretty aggressively, which has caused then the US dollar then to follow suit. But what we have out this afternoon is this manufacturing PMI. Now, are these moves a front runner for this PMI? Now, some market participants are expecting a higher than consensus figure when it comes to the manufacturing PMI. Now, if we did get a higher than consensus figure, if we did get positive manufacturing figures from the US later on this afternoon, that would go in line with last week's data. We had growth strong, extremely strong in the US over the course of Q2. We had durable goods orders extremely strong out of the US last week. Inflation pretty in line with consensus on Friday. That brings us then forward to today. Now, what you want for the economic data is for it to trend in a certain way. You want the majority of them to beat consensus, or you want the majority of them to miss consensus in order to get a clear kind of directional trend on any of these assets. So if you do get a number that's positive on this manufacturing PMI, then you've got a situation where you've got strong growth, strong durable goods orders, strong manufacturing PMI all in a week. That is not a situation that is conducive to getting inflation under control. That is a situation where the Fed will continue looking at hiking interest rates when market participants think they may be done. So important figure this afternoon. That then brings us on to the rest of the week. Obviously we've got NFP on Friday that we need to think about as well, and especially if we get a strong figure here, strong ADP employment plus strong NFP, that will pretty much nail on another interest rate hike, or potentially might nail on another interest rate hike. Couple that with the fact that oil is high, prices of oil being high again continues to put upwards pressure on inflation, and that is not good with interest rates currently where they are at. So in terms of trying to find tradable opportunities, that is what you will probably want. Obviously, in terms of getting inflation under control, that's not what you want. But the higher than anticipated manufacturing PMI, I think, opens up a few opportunities, or maybe some continuation of this move higher in the US dollar and a continuation of this move lower in stocks. That's what I'm kind of hoping for as we head into this US session later on in about half an hour's time. So manufacturing PMI, if we do get some strong numbers, as likely to continue stocks to the downside, likely to continue pushing yields higher, which then in turn drive the dollar higher as well, which is obviously a contributing factor to stock index downside. If that goes the other way and it misses consensus, I think it's a slightly more difficult trade. You probably see a pullback against these moves, which maybe is not exactly what you want at this moment in time. But that data, 3 o'clock this afternoon, US markets will be open, cash markets will be trading. All eyes will be on that at 3 o'clock.